Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's January 16th. Hope you guys are having a great morning thus far. We got a couple economic news. Quite a bit of news is also being delayed due to the government shutdown here. So a lot of things that would be coming out, like today, we would have had the retail sales, but that's being delayed due to the government shutdown. But today we do got the sorry about that. Home builder index, which is kind of the confidence level for home builders, and this has been kind of declining of late. So the previous reporting back in December was 56, but it did rise in January. So they're feeling a little bit more optimistic, which is obviously a good sign at 58 here. Anything above 50 is considered optimism, and anything below, a little more pessimism here. Later today, we'll get the Fed beige book. So, as we're looking on a global level, the economists have been kind of looking more on the global level on the possible global shutdown. I mean, not shutdown, but a global slowdown. They are going to be probably looking at the Fed beige book because this will give us more into different areas of the U.S. of what the Feds are reporting in various parts of the regions of the U.S. in regards to what the economy is doing on a micro level here versus a macro level here domestically here. So let's kind of jump ahead here because most of our news is really coming from the headline news. So the stock market is up today. The Dow's up around 150 so far this morning. We had finally some good Q4 earnings reports on the financial sector. We've been getting disappointing ones from Chase and Citibank. But today, B of A and Goldman Sachs had some good numbers, so the market's feeling a little bit more optimistic today. Also, on top of that, China basically announced that they're going to inject about $83 billion into the economy, kind of get that stimulated, get that moving along here. So, of course, investors are liking that. They're afraid that China's slowdown was going to drag both Europe and the U.S. down on their economies. And so China is showing action that they're doing something about it to try to get that stimulated. Yesterday, as I mentioned yesterday, they were going to have the vote for the Brexit, the divorce from the Brexit, and that did not pass. It was, they did not like Theresa May's proposal. So later today, they're going to be doing their no confidence. They do expect Theresa May to survive the vote of no confidence, but this will be later on. So this is important primarily because they're concerned that if they just do a hard one, that it could really disrupt the market. So this is being looked at pretty carefully. How this is going to be structured and how they move away. If it's going to be a soft divorce or if it's going to be a hard divorce, one way or another. So obviously, a hard divorce is going to have a pretty abrupt, uneasiness to the markets. Also, we are into, I think they said the 26th day so far of the government shutdown, which is, kind of wearing on everybody right now. So again, hopefully at some point they will get together and they will be able to get this taken care of and people can get back to work here. All right, so let's kind of move forward, see how this is affecting the bond market. The bond market is testing the floor the floor support here. So hopefully this will hold here because, like I said in the past, if it breaks, we're going to be kind of falling down here and it will lose whatever trend we had. And right now we've been kind of going the sideways pattern here, which is starting to put us out of that trend as it is. So we're kind of going the sideways pattern here, and at some point it's waiting for that cue to go one way or the other, whether if it's going to go up, continue its trend upwards, or if it's going to break the trend and go downwards. And obviously, this is going to be this floor support holding today will be important. 10-year Treasuries we're up a little bit. We're up at about 2.73, I think it is. Yeah, 2.73. And again, it's got a little room to the upside here, and before it reaches the 25-day moving average here. All right, so rates are about the same. There's really not a difference today. We are down maybe about 6 points, but again, it's nothing from what we left off yesterday. It's been mostly going on a sideways pattern, so we're not really seeing any change in rates or this week so far. If anything changes, I'll post on Twitter here. You can follow me at Mike Bjork if you guys want to get any updates throughout the day. Again, just come over to Twitter. You can find me at Mike Bjork and follow. All right, guys, have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.